Unlocking the Secrets of Forex Trading, a beginner's guide to mastering currency pairs, charts, and strategies. Forex trading opens the gateway to the world's largest financial market, where trillions of dollars are traded daily. This global marketplace offers unparalleled opportunities for traders to profit from currency fluctuations. Its 24-hour accessibility makes it attractive for individuals seeking flexibility and the potential for significant returns. Understanding currency pairs is fundamental to navigating the Forex market. Each pair represents the exchange rate between two currencies, dictating how much of one currency is needed to purchase a unit of another. This concept is crucial for making informed trading decisions and strategizing effectively in the dynamic Forex environment. The majors dominate the Forex landscape, consisting of the most traded currency pairs globally. These include pairs like Euro to US dollar and US dollar to Japanese yen, which are favored for their liquidity and lower spreads. Traders often start with these pairs to leverage their stability and high volume, essential for minimizing risk and maximizing potential gains. Cross pairs and exotics introduce a layer of diversity to trading strategies, offering opportunities beyond the major pairs. While cross pairs involve major currencies without the USD, exotic pairs include one major currency and a currency from a developing economy. These pairs can present higher volatility and risk, but also the potential for higher rewards. Reading Forex charts is vital for interpreting market movements and making informed trading decisions. Beginners learn to decode these visual representations, identifying trends and patterns that hint at future price movements. Mastery of chart reading enables traders to anticipate market shifts, an essential skill in the fast-paced Forex trading world. Candlestick patterns serve as the visual language of the Forex market, offering insights into future price movements. These patterns, formed by the price movements of currency pairs, can indicate potential reversals or continuations in trends. Traders who master this language can better anticipate market movements and make informed decisions. Technical analysis involves using historical price data and chart patterns to predict future movements. This approach equips traders with various tools such as trend lines, moving averages, and oscillators. By analyzing past price action, traders attempt to forecast where prices might head next, providing a strategic edge in decision-making. Fundamental analysis, on the other hand, dives into economic indicators and news events to gauge their impact on currency values. This method analyzes reports such as GDP, employment rates, and interest rate decisions, offering a broader view of the economic health that drives currency strength or weakness. The role of central banks in Forex trading is pivotal, as their policies directly influence currency values. Decisions on interest rates, monetary policy, and economic outlook statements can cause significant market volatility. Traders closely monitor central bank announcements to predict currency movements and adjust their strategies accordingly. Leverage and margin trading are double-edged swords in Forex, allowing traders to control large positions with a relatively small amount of capital. While this can amplify profits, it also increases the risk of substantial losses. Understanding and managing leverage is crucial for safeguarding one's capital against the unpredictable swings of the Forex market. Risk management is crucial in the volatile world of Forex trading. It involves strategies to protect your capital, such as setting stop-loss orders to limit potential losses. By understanding and applying risk management techniques, traders can navigate market fluctuations more effectively, ensuring longevity in their trading careers. Developing a trading plan is akin to drafting a roadmap for success in the Forex market. It outlines your financial goals, risk tolerance, and strategies for trade entry and exit. This blueprint helps traders maintain focus and discipline, essential qualities for navigating the complex Forex landscape with confidence. Trading styles vary from the fast-paced scalping, where profits are made from small price changes, to the more laid-back approach of position trading, focusing on long-term movements. Each style requires a different set of skills and mindset, highlighting the importance of choosing a style that aligns with your personality and lifestyle. Discipline and patience are the unsung heroes of successful Forex trading. The ability to stick to a trading plan and wait for the right trading opportunities can mean the difference between profit and loss. These qualities help traders overcome the emotional challenges of trading, such as fear and greed. Using Forex signals and alerts can enhance decision-making by providing timely information on market movements and potential trade opportunities. These tools support traders in making more informed decisions, helping to capitalize on the market's volatility while minimizing the risk of missed opportunities. Mastering the psychology of trading is pivotal for success in the Forex market. Emotions like fear and greed can cloud judgment, leading to hasty decisions. Successful traders cultivate discipline, patience, and emotional control, ensuring that each trade aligns with their strategy rather than transient feelings or market noise. Demo accounts serve as an invaluable tool for both novices and experienced traders, offering a risk-free environment to refine strategies, test theories, and gain familiarity with market dynamics. This practice arena is crucial for building confidence and understanding the nuances of different trading platforms without jeopardizing capital. Navigating the world of Forex brokers, including ECN, Electronic Communication Network, and market makers, is essential for traders. ECNs offer direct access to other market participants, while market makers act as intermediaries. Understanding their roles and the impact on trade execution and spreads can significantly influence trading effectiveness and costs. The impact of global news and events on Forex markets cannot be overstated. Economic announcements, political instability, and significant global events can trigger volatility, presenting both risks and opportunities. Traders who stay informed and can interpret how events influence market sentiment will position themselves to make more informed decisions. Technical indicators, such as MACD, Moving Average Convergence Divergence, RSI, Relative Strength Index, and Bollinger Bands, are tools traders use to predict future price movements. These indicators, each with their unique insights into market trends and potential reversals, are integral for developing a nuanced trading strategy that can adapt to changing market conditions. Fibonacci retracement is a tool embraced by many traders to forecast future market movements. It relies on mathematical ratios derived from the Fibonacci sequence to identify potential support and resistance levels. This technique is particularly popular for its ability to pinpoint price reversal points with a surprising degree of accuracy. Support and resistance levels serve as the cornerstone for many trading strategies. Identifying these zones allows traders to make informed decisions about entry and exit points. Support levels indicate a price floor where the currency pair might stop falling, while resistance levels suggest a ceiling where the price may struggle to rise further. Pips, lots, and spread are fundamental concepts in Forex trading that determine the profit and loss of trades. A pip represents the smallest price move a currency pair can make, while a lot is a standard unit of currency. The spread, the difference between the bid and ask price, affects the cost of trades. Compounding power in Forex trading can significantly boost profits over time. By reinvesting profits into future trades, traders can experience exponential growth in their accounts. This strategy requires patience and discipline but can lead to substantial financial gains by leveraging the power of reinvestment and the cumulative effect of winning trades. Forex robots and automated trading offer a hands-off approach to the markets. These systems execute trades based on predefined criteria, removing emotional decision-making from the process. While they can provide efficiency and discipline, relying solely on automation neglects the nuanced understanding of market contexts that experienced traders bring to their decision-making. Social trading has revolutionized the way we approach Forex trading, offering a platform to learn from more experienced traders. By observing and replicating the strategies of seasoned professionals, beginners can gain valuable insights and improve their trading skills without going through a steep learning curve. Tax implications for Forex traders vary significantly across different countries, making it crucial for traders to understand the laws governing their trading activities. Knowledge of how Forex profits are taxed can help traders plan their trades more effectively and avoid any unpleasant surprises during tax season. Balancing Forex trading with life demands a strategic approach to time management. Successful traders know how to allocate their time efficiently, ensuring they do not miss out on important life events or suffer from burnout. Setting clear trading hours and sticking to them can help maintain this balance. Avoiding common pitfalls in Forex trading is essential for long-term success. Many traders fall into the traps of over-leveraging, not using stop-loss orders, or letting emotions guide their trading decisions. Learning from these common mistakes and adopting a disciplined approach can significantly improve a trader's profitability and sustainability. The future of Forex trading looks promising, with advancements in technology and analytics continuously shaping the market. Trends such as the integration of artificial intelligence for market prediction and the growing importance of mobile trading platforms are expected to further enhance the trading experience and accessibility for traders worldwide. Navigating Forex regulations and safety is paramount for every trader. Different countries have their own regulatory bodies ensuring the integrity of the Forex market. Traders should always ensure they're dealing with a broker who is fully regulated to mitigate risks and ensure the security of their investments. Using economic calendars for trading opportunities can significantly enhance decision-making. These calendars list upcoming financial events and indicators, allowing traders to anticipate market movements. By understanding the potential impact of these events, traders can strategize accordingly, making informed decisions that align with market dynamics. The role of volatility in Forex trading cannot be overstated. It represents both risk and opportunity, influencing the potential for profit and loss. Traders must understand how to measure volatility and apply strategies that match their risk tolerance. Mastering this aspect can lead to more effective trade execution and risk management. Diversification beyond Forex to commodities and indices can offer traders additional opportunities to hedge against risk and increase potential returns. Exploring these markets can provide a broader perspective on global economic trends, helping traders to make more informed decisions and potentially stabilize their investment portfolio. The importance of a good trading environment is often overlooked. A comfortable, distraction-free setting can significantly impact decision-making and focus. Additionally, having the right tools and resources at one's disposal can streamline the trading process, making it easier to stay informed and react promptly to market changes. Keeping a trading journal is an invaluable practice for any Forex trader. It enables you to track your growth, reflect on your decisions, and learn from your successes and mistakes. By documenting your strategies and outcomes, you create a personal roadmap that guides your future trading decisions, fostering continuous improvement. The evolution of Forex trading platforms and technology has significantly democratized access to the global markets. Today, traders can execute trades from anywhere in the world with just a few clicks. This technological advancement has not only increased market accessibility but also enhanced trading efficiency, allowing for real-time decision-making and analysis. Forex trading has a profound global impact, influencing economies and financial markets around the world. It facilitates international trade and investment by enabling currency conversion. Moreover, the sheer volume of Forex trading contributes to the liquidity and stability of currency values, playing a crucial role in the global financial system. Embarking on your Forex trading journey requires confidence, knowledge, and a strategic approach. Understanding the market's fundamentals, mastering analytical tools, and developing a disciplined trading plan are essential steps. With perseverance and continuous learning, Forex trading can be a rewarding venture, offering opportunities for growth and financial success. The importance of a good trading environment cannot be overstated. A conducive trading setup, with minimal distractions and efficient tools, can significantly impact your decision-making process and overall trading performance. Creating a space that fosters focus and discipline is crucial for long-term success in the dynamic world of Forex trading.